Hello everyone, hi, welcome to the channel of Wall Street Mojo.
Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon.
Friends, today we have a topic which is interest versus dividend. We are going to discuss the top 9 differences with the help of the infographics here. Well, we'll begin. Everyone must be well versed with these two terms. It's like, very common terms and it is used in day-to-day life. So interest and dividends are like, completely different concept altogether. If you see for interest is sort of a price, better to say as charges. You can say as charges a borrower pays to lender for letting the former use the money the later had. So from a different perspective, if you ask why your savings bank account offers you interest, you would see that the bank pays you interest as you let the bank use your money, right? But in case of dividend, on the other hand, is a percentage of the profit company shares with the equity shareholders and the preference shareholders. So for preference shareholders, a dividend is mandatory because they are like, before equity shareholders are given a single penny. For equity shareholders, a dividend is only paid when the company decides to of the equity shareholders out of the profits, they earn after paying off, the debt holders and the preference holders. On one note, receiving interest and dividend seem like, income from any individual. Interest and dividend, they both have their different meaning altogether. The nature, the scope, the opportunities, and so on and so forth. So in this tutorial, we will talk about these two subjects in a detailed format, in detailed fashion, and we'll also do a comparative analysis of the interest and dividend. What are we going to do is we're going to start with the infographic discussions. Let's try and understand that. Interest versus dividend. The first is going to be the meaning. Interest is the charge against the money that is offered to the borrower. It is the charge against the money that is offered to the borrower. So when you borrow some amount from the financial institutions, what you pay is called as interest because that is a charge against your money. But dividend is sort of percentage of the profit that is offered to the shareholders of the company. Let's say you own a share of some company, so you have been paid dividend. So where this dividend is coming from? So it is coming from the profits of the company that have earned during that particular financial year. This is the difference, interest and dividend. What it's all about. Interest, it can be called as a fee, a sort of, a commission for letting someone use the money of someone else. And dividend is a way of giving back to the owners of the company. It is like, something, a return. What you're going to give is return. Over here, it's a fee. Over here, you can call that as a returns. Now, what is the nature? It is a charge against the profit, and it is the proportion of the profit, because here the proportion of the profit has been paid to you as the dividend, but here it is a charge against the profit as an interest. Is profit necessary? No. Interest needs to be paid even if there is no chance of making profit. Even if you're making losses, you cannot just back off and say no, I won't be able to pay. You have to pay the interest. But in case of dividend, the company may say, sorry, we don't have money this year. This financial, we didn't do healthy business. We had losses. So this year we are not going to distribute dividends. So they may say that, we may not distribute dividends. So to distribute dividend, making profit is absolutely necessary. But in some cases, there are some companies, they also give dividends in losses. I don't know what exactly may be the thought process in their companies, because dividend have so many principles, like there is a Gordon's growth model. Everyone have to say their own principles that whether dividend should be paid or not. There's one Walter's method. You can do a research on all this method. There is a Modiganali Miller approach. There is Graham and Dodd model. So this all models are used for dividend, whether dividend should be paid or not, and in what circumstances they may be paid or they may not be. So try and do a research on that. Fifth, determines interest. How much profit would be earned, or how much loss a company would incur. It determines the profit can be earned and the loss can be incurred. And in case of dividend, how much money can be reinvested, how much money can be reinvested into the business. If it has not been paid as dividend, then that amount can be redeployed in the back into the business for expanding, for capital expenditures, for reviving the company, for any other purpose. So reinvestment can be done with the help of dividend if it is not paid to the shareholders. It is paid to interest is paid to the equity shareholders and the preference shareholders. No, this is wrong. Over here, it should be The lenders, the interest should be paid to the lenders, the creditors, and the debenture holders. And this equity shareholder and preference shareholder should come over here. This is actually so the equity shareholders and the preference shareholders will come over here. The dividend is paid to equity and preference shareholders, and interest the lenders and the creditors and the debenture holders. Optional interest. Interest is never optional. Interest is never optional. It must be paid. And in case of dividend, a company can decide when to pay dividend and when not. They have a discretion in that particular regard. Over here, interest is compulsory, dividend is discretionary in nature. Now, how it is calculated? If you see for interest, it is fixed. There's a fixed percent. Let's say, you have bought a loan of $1 million and you have bought it for 10%. So every term for which it is decided for 20 years. So you'll pay 10% for 20 years. You'll pay 10% for 20 years as a part of just interest, and that is fixed. But dividend depends upon the company and its strategic plans, but it remains fixed for the preference share holders. Now, the benefit in the tax expenses. Interest. Company gets its tax benefits when they pay interest to the debenture holders. In case of dividend, there is no tax benefit for distributing the. So tax benefits is not available here, but when you put down interest in the P&L, on the P&L side, you get interest as an expense and your tax expense gets reduced. These were the top 9 differences that you were supposed to learn or get well versed with, so as to be more aware about such topics. See, there are many differences between interest and dividend, but some of the key ones I'll tell you. Interest is the charge against the money, and a dividend is the what we call as the percentage. Second, interest is charged against the profit, and a dividend, on the other hand, is the proportion. It is the proportion of the profits. No matter what happens, profit or loss, a firm needs to pay interest. So it's like compulsory to debenture holder or lenders. And only when a company makes profit, dividend is distributed. So it is over here discretionary, you can say that. Fourth, interest is paid to the lenders, creditors, debenture holders, and a dividend is paid to the equity shareholders and preference shareholders. The interest determines how much the profit and loss a company would make, and dividend determines how much profit would be reinvested into the business. So let me finally recapitulate all the things. Even if the interest and dividends are two separate things, two separate concepts, both of these are very important component in a business. Interest basically helps the business to reduce the tax expense and earn a greater financial leverage. And a dividend, on the other hand, it ensures the business is whether it is running well or not. So if a business does not pay interest, then the business won't be able to earn the financial leverage, because they are not paying interest means there's no debt. So if a business does not pay dividend at all, these shareholders would stick to the company. We cannot forget the primary focus of the business is to maximize the worth of the shareholders. And that's why the interest and dividend interest, they both are important for the business and for perpetuating for long period of.
So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.